All right. Can you turn it on? Fantastic. Gentlemen, take your seats, get comfortable. I appreciate everyone who came today together to listen about fintech. Uh, Seems like there is some interest in the category. I would tell a few words about who we are, Target Global, VC investor from the very early till very late stage. Fintech is one of the segments that we invest quite actively. I mean, among the portfolio investments are the likes of Prosper or Finance Folks, the insurance company in Germany who recently led the Series C round, and some others. Some of you may be familiar with my partner Mike, who is our 100% dedicated fintech expert, who sadly is sick today and couldn't come. You can see I'm not Mike, at least because he's a boxing champion, and at least 2 times taller than I am. But I know something about fintech, and we try to share with you our in-house views on certain segments that some of the investors in the room may easily disagree, but hopefully all of you would find interesting. So, thinking of fintech, I apologize for the small screen that may be a bit difficult to see from the back. You see here usual verticals from asset management to trading and so on. The blue ones are those that we are maybe a bit more excited than others, and we would make a deeper dive later on into the lending, insurance, blockchain, and trading. Doesn't mean that, say, there is no good payment companies. Clearly, there are fantastic ones like Adyen or even our portfolio company Zeus. Yet, as a segment or as the category, we are less certain about this one, for instance, and I would also try to explain why later in the presentation. So let's think about online lending for a second. We are in the wonderful London city where Zopa have started a bit more than 10 years ago, and was quite quickly joined by Prosper Lending Club, several German online lenders, some of those a bit more or a bit less successful. And the first cohort was marketplace lenders, and a bit more recent newcomers like Avant and Affirm are lending from their balance sheet. If you think about small business companies who came across a bit later, you already see a mix between the peer-to-peer or marketplace models and the balance sheet ones. And you have quite a few of those. You can say there is a niche about invoice financing. There is a separate niche about loans to students, of which Sapphire is probably the biggest one, but we also have one around here called Future Finance. And the real estate is another big vertical. My point is that if you look at the online lending right now, it looks pretty much like this, with the endless number of players, if you ask me, and I would be very hesitant in investing in yet another student lender out of whatever, any city. What's happening next? Well, in general, the Morgan Stanley who have done this forecast, and we, as we try to map the space, we do think that the space overall would grow just because it is a tiny part of the very large market that can be completely digital, right? You know that penetration of groceries in digital is 2%, and maybe fashion is consumed, 7% is consumed online, because there are good reasons to check out the clothes before you buy it. But why would you check out the money before you get the loan if you can avoid to do that? So in general, we do see a lot of fundamentals for the market to grow, and this is at the same time driven by more professional asset managers coming to the space and providing this money through the platforms. Eaglewood was one of the first to start in 2011. Prime Meridian, many others joined. Colchis, for example, relatively newcomer, 2013, have raised already $1 billion and mostly invested it into the peer-to-peer lenders. And you can see a bit more established and well-known brands, including Credit Suisse and JP Morgan, who may have chosen this year, based on the lending club situation, maybe not to increase the $1 billion they have given immediately, but in general, most of them continue to be bullish for the industry. I mean, you can name many, many more of them. What in this crowded industry we think might be an interesting investment idea right now, when you have two parts of the market, think about it as supply and demand, that are quite fragmented, it's clearly, a good place to start a marketplace. So in fact, you can think about this marketplace for the marketplace lenders as well as for balance sheet lenders. I would explain in a second. If I am, Prime Meridian, a nice San Francisco headquartered hedge fund, $500 million assets under management, do I necessarily want to deploy my client money on the lending club? Probably not. I would do lending club and prosper, and also have my real estate fund, and I have 7 platforms there. How do I figure out how are the different loans should be compared between these platforms? How would I immediately deploy these loans across different platforms without playing with 10 different interfaces? So some of the companies you can see here, Orchard, for instance, who is providing the solution for the asset managers to invest in several marketplace lenders, or Black Moon, that does the same thing for balance sheet lenders, substantially simplifies the process and helps the asset managers to, to leverage the arbitrage opportunities that you have across different platforms. Another more software solution for this situation is Monjo PeerIQ, where they do not necessarily enable the purchase of loans, but provide you the statistics and analytics and risk testing for how your portfolio would behave in the certain conditions if the unemployment rate changes and so on and so forth. So we do think that aggregation or sort of higher level play is very relevant in the current stage of quite crowded online lending market. Moving to the next category, securities lending. I wonder who here have never traded a stock, never bought a stock, never sold a stock for your broker account. I guess no one raising the hands just because they're not in the mood of raising, or because I think vast majority did it. However, if you have ever shorted the stock and the bank have lended you the stock, or maybe somebody else lended you the stock, I doubt that anyone here in this room have lended the stock that you are holding, whatever the stock you like. I don't know, like BP, for instance. You have ever lended it someone and got the interest on this. That the interest could be relatively high. You can earn on certain special cases like 10% per annum and so on. Well, the graph here is actually exactly to the point I mentioned, is that overall amount of securities that could be lendable is huge, but what is actually being lended is very small. Well, very small means the 8.5 billion market. 8.5 billion market, that is a tiny share of all the securities could be lendable. Of those, the real money are made on certain special stocks, say, Tesla, who have been, up and down very substantially, and a lot of people were shorting it or doing the pair trades, and so on and so forth. But the question is how to unlock more supply of the stocks that are owned, by you, by me, by family offices out there. In fact, there is a solution. And if you think about this market right now, you can say it's tiny, like the US taxi and limo market once was seen as tiny. But now we see all the gorillas in the space who have grown the market itself. Now there are lending happening just for 8 billion, but if you make available all the stocks, or at least much larger portion of the stocks owned by family offices and different institutions for lending, the amount of market expands substantially. So, one example is the company called ShareGain, who is doing this. Again, what it is about, think about it as the software that connects to your equity portfolio and earns for you, risk-free, additional, 1 or 2% per annum, just by following which stocks in your portfolio are now, moving and are becoming those special stocks that you have seen on the previous slides, and where you can get, 15, 20% annualized interest rate just by lending it. and it could be lent, for 2 weeks, for a month, and you would get the additional interest. You may think why banks are not doing this very aggressively. In fact, they did before 2008, where the balance sheet were large and they were having a lot of different stocks available. But now with a much smaller balance sheet, and also for the specials, again, Tesla is one example, but there are many other smaller companies. They just don't have available supply. And if hedge funds or other people can get the supply through the platform, it's quite an interesting solution. So there is a lot to be thought, I think, about the different niches in the trading and fintech space. And this is the illustration of one of the niches where the niche could be covered, but also it could be substantially expanded. Let's talk about insurance space for a second, that many think tanks of this world are comparing with fintech, sometimes saying it's the other thing, comparing it with lending. And while a lot of things being done in fintech is vulnerable to change of regulations, I don't know, think of many microfinance companies who are earning huge amounts of money, but after the interest rates were capped at certain regions, are not doing it anymore. Or there could be many other regulation issues. In insurance, it is much less of a case and much less of a risk. You have different companies going after different parts of the segment. I guess the basic premise is simple. There are huge elephants that are printing money and have no incentive really to be efficient and could be disrupted in one way or another. There is a bunch of companies who are going after the broker part of the segment that is existent in one or another form in different geographies. And with a vision to replace the broker, who is often inefficient, does a lot of things manually, a lot of insurance propositions that he brings to the customer are not clear, the NPS is low, so a lot of reasons for the situation to be disrupted. There are people who are going after the carriers as well. That is, of course, much more costly exercise. Although smart restructuring it, reinsuring the risk, you can try to do it relatively cheaply. And then a bunch of people that we are quite excited about, as you can tell by our recent investment in finance folks, that is not at all the only company in the space. These are people who are trying to leverage different business distribution channels to get more customers. I mean, finance folks know no secret the way it works. It's not trying to replace the broker, but it enables broker to be more efficient and provides them the software through which they can manage their accounts, manage their customers. If there is a new lead, maybe far away, or I cannot take it, I can pass it to other broker. All together, collectively, we are increasing our bargaining power towards the carriers, and you can get better terms. And in general, just the scaling works much faster than acquiring the clients one by one over the Facebook and waiting while in 12 months from now they would buy another insurance, and the payback on your CAC would effectively be very low. Let's focus on remit and exchange segments, and this is probably the one where we have a bit of a contrarian view. A lot of smart investors have put money behind Azimo or TransferWise. It all started with Western Union, that dependent on which destination you look at may have 2 or 4% commission, or sometimes even much higher commission. And what we see here is new players coming in and dumping the commissions, making it much cheaper to transfer money. Very similar to a forex exchange, actually. I mean, the banks are charging huge amount of money, and you see like every new player, coming in and dropping the commission. Some of them basically have commissions of 0. You can argue that with the blockchain being implemented, the commission of 0 would be the default. And in fact, we see it as a bit of a value destructive exercise. As to be bigger and leading player, you have to lower your margin and basically distract your business. Well, what could make sense clearly for us is to do two kind of things. One is try to be a bit less B2C focused by B2B focused, doing different value add services for the enterprise, integrating with the enterprise and making your solution sticky So when tomorrow there is a crazy guy in the room doing the same thing but for free, it's not that easy for the enterprise to switch. Or even building additional services for the consumers on top of the relationship that you have formed through one of these models. I guess these two companies below are some of the examples that are going into the enterprise directions for a second and trying to create additional value. For example, currency hedging on top of just currency exchange, and so on. Well, the blockchain and cryptocurrencies, an orphan of the European investment community, I suppose, something a bit more trendy in the US and elsewhere, sometimes by financial people that I'm coming from the financial industry. I worked for the bank before. I think there is enough skepticism around this, geeks trading Bitcoin like there is no tomorrow. This graph shows us that actually the number of transactions, have been growing quite substantially still. The bubble that have been out there in 2013 have, took care of itself, and now you have a more healthy trend upwards. Maybe the new bubble is forming, but also it's not, Bitcoin. There are new concepts out there like, Ether, cryptocurrency. Also, finding a lot of applications who are willing to use it, and therefore growing in price. I think one of the myths around the industry is that, this is all pro bono kind of, dealing. No one made money yet on blockchain. That is probably true. No one made money on Bitcoin. That is probably untrue. I think one meaningful class of players that is out there are the exchanges, either between cryptocurrencies or fiat to crypto, that are already generating meaningful revenue, some of them profits. So the industry is getting to be for real. But one peculiar nuance, if you want to buy Bitcoin, you have a very lengthy process. You want to open an account, you want to go through KYC, that I can tell you is quite painful. You download the wallet, you try to figure out how it works. Maybe you're smart techie people. It took for me a lot of time just to figure out how it works. I'm not that smart. Then you have the exchange interface, and again you need to deal with that. You can only put the money there with a bank transfer, no other means of transfer money available. Trading platform interface you have to figure out. And then if you want another currency, start from the very beginning. So I guess that's quite clear why the thing is not becoming mainstream so far. But as it becomes more simple and more applications adopt the solution and more people would be exposed to the currencies, I suppose the number of transactions would grow even further, and likely the price will continue to grow as well. And this is quite visionary space. Lastly, I want to share an idea where we haven't invested so far. I don't think there are almost any companies being formed. So for anyone in the room, pursuing entrepreneurial opportunities and being interested in this one, I would strongly advise to have a look in this idea. This is the asset management in crypto, because all the trends we are seeing, it still very much revolves around our techie community playing with this. And some of the bigger guys in the financial industry understanding it matters, but are not bothering themselves, and it's probably not the solution for the institutional to download all the wallets and all the things I showed in the previous slides, but want to get the exposure. And the people who would be able to provide the exposure in the easy and convenient way, either through building mutual funds or ETFs or whatever, we think can benefit substantially from the trend, especially because there are so many different currencies. And you can recognize Bitcoin and Ether probably. I mean, neither me nor I guess most people of the room know what all other signs means, and how to track if this one is coming in vogue or that one. Again, this is the portfolio approach, and the portfolio is exactly what asset manager is usually supposed to do. So these were several, I guess, verticals and our views in this regard. I would love to hear any questions or observations from the people in the room, and continue this conversation offline as well. Thank you. Do we have the microphone in case there are any questions? Yeah, we do. So if anyone? Yeah. Can you please bring the microphone? There is lady over there and then gentleman in the third row.
You mentioned multiple areas of fintech startups. You didn't talk about analytics or big data or forecasting. Does that have a reason?
No, I mean, not a particular one. I think, there are a lot of things to be made here. I guess if you think about fintech and especially the applications to the stock market, where we can use a lot of data, to create the superior algorithms and so on. I actually love the space. I founded my first company, 10 years ago in this space actually, and we know a lot of successful businesses. I think especially coming from Israel, who were leveraging the data big time to earn money. I guess at one point, data application to the stock market that is not the only possible data application, but is the one. At one point, it's hard to distinguish between the tech company and the hedge fund. And we have seen some of the tech companies who are saying, we're tech companies, but you're saying, look, I mean, if you're really making the return, why just you don't invest your money or your investors' money? And some of those who really nailed the strategies and nailed how to do the data, they are not fundraising, they are not getting investor money as the startup, but they're just reinvesting money, earning their 1,000% per year. I genuinely know few companies who are capable of that. And they are going completely separate route, very distant to the NOAH crowd and investor community out here. Yeah. There was another one. Let me help you with that.
Why not payments? You grayed out payments. You told you're going to explain it, but
I mean, yeah, I think this is a bit along the same lines as the as remittance exchange. I guess the question is about margins, and of course you can build several businesses on top of your payment gateway and your payment channel. There are different tweaks that you can do to that. I mean, what we bet on was, for example, Israeli company called Zeus. It is the smart routing for payments. I think this is very smart value add in payments, and anyone who can provide a substantial value add on top of the models like ADN, O Square, and iZettle that in my opinion have been already played out. I'm trying to get to the logo of Zeus here. Again, the concept of smart routing is that if you is a Chinese person, for instance, shopping at on the UK retailer that yet to be unnamed, that is a big client of the company, apparently 40% of Chinese credit cards gets rejected. And retailer may even not notice it because they just see the conversion from China is low. That's probably fair, right? It's a different country. But if you allow routing of the credit card of the individual based on his IP and location and so on to a different bank, not Morgan Chase, for instance, but Chinese bank, you can increase conversion twice. And basically all the marketing dollars that were wasted on acquiring this Chinese clients, you can regain part of that. I think this is a very interesting solution that can come on top of ADN, on top of your deals with credit cards or PayPal. So I think there are interesting tweaks, but the industry in general is the margin profile that bothers me. Right? Any other questions? Maybe, the last one, and then we...
Thanks for the presentation. What do you think about robo-advising?
Oh, yeah.
And bank account aggregation, which is different.
Yep. Robo-advising. I guess the companies we have seen in this space, we didn't come across something that completely strike us as they nailed it. Doesn't mean the newcomers and challengers of the space couldn't do that. To me, I would be a bit boring. Again, the margin profile. We see them, commoditizing the industry. We see them getting to hundreds of millions of dollars under management. But unlike the good old days of the asset manager who would be charging his 2 and 20 is too much for the mutual fund, but at least 1.5 per year. that is, the real revenue you can pay nice bonuses from, those tiny bips that they are charging, is very hard to see how you nail the business model unless you would be able to upsell some very nice and smart products that, to our knowledge, we have spoken, I think, to most of the people here in the US. We haven't seen that done efficiently so far. Account aggregation, you mean like which companies? Like some of the deposit solutions, kind of deposit stuff, or something different?
You have few startups in Europe.
Yeah.
One who was presenting this morning, Figo, I think. You have banking in France. You have a few actors in Europe, in Spain also.
Yeah.
And there is a new law, which is called a European law, which is called DSP2, which will be available in 1 year, I think, which will force banks to open accounts with the IT flows.
Yep.
And there is things going on to get access to. And just to be brief, account aggregation is a bit technical, but the business is when they have the accounts, they have the transactions, they have the profile, and they can propose products. They can get commissions and margins by selling the right financial product. So there is a new possibilities and a new law in Europe.
No, I agree. I cannot agree more. I think there are a lot of opportunities, and not everything that makes sense can fit into one of these bigger segments. I think, again, regarding the accounts, what have existed so far in Europe and have done fairly well, I think if you think of Saving Global or deposit solutions, the people who were trying to get one single access point for you in the German bank, for instance, and then you would be able to get your money through different banks in the other places in Europe where the deposit rates are higher. And again, this is very interesting business. Both of the ones I named have grown to the sizable amounts. Guess what? I mean, the difference between the German and Polish rate is of a certain amount, and the commission you can charge on that is of a certain amount, couple of bips. And first of all, even at the 500 million volume, people hardly see the revenue, but also due to different regulation changes, and as the interest rates in the world in general starts rising, you may see this business disappearing. Just because if you have the 0 point something rate in Germany, it makes sense to go to Poland, but if you have 2% again, it does not. So I guess to conclude, the fintech is of course the area full of opportunities far beyond these verticals. I think this is the area you should be smart about, because the regulation can screw up the whole thing. And also this is the area clearly with a huge market, but you should be thinking a lot about margins and how I can earn with my basic business, and not some possible future monetization strategies that you may or may not come up in future. That's my humble opinion that may or may not be right. Thank you very much, gentlemen. I appreciate the time.